Welcome to the Economy Magazine at I-24 News, where we provide a daily view on global markets and the world economy. I'm Natalie Ehrlich. Well, coming up today, China's stunning devaluation of the yuan puts global markets in panic, and Greece clinches a third bailout deal with international creditors. Let's start now with the headlines. Well, China devalued its currency a second day in a row. The surprise move sent shockwaves through global markets Wednesday, as investors increasingly worry the world's second largest economy may be worse off than originally thought. Asian markets were down across the board. Hong Kong's Hang Seng fell 2.4%, Japan's Nikkei dropped 1.6%, and China's Shanghai Composite slid 1.1%. Meanwhile, the pan-European stock 600 was down 2.3% in the early hours of trading, and we'll have in-depth analysis on this later in the program.
I think the present situation won't have a clear impact on the areas of trade and investment. My personal feeling is that the adjustment of the renminbi, especially downward adjustments, will have a stimulating effect on exports.
The International Energy Watchdog says oil demand is growing at its fastest pace in 5 years, fueled now by prices falling below $50 a barrel. In a closely watched monthly report, the IEA said global oil demand would grow by 1.6 million barrels a day this year, revising its projection up some 200,000 barrels a day. The watchdog also expects oil demand will rise by 1.4 million barrels a day the following year. According to the Wall Street Journal, Credit Suisse and Barclays are in settlement talks with the New York Attorney General and SEC over alleged dark pool malpractices. The two banks are the largest operators of so-called dark pools, which allow traders to swap shares with greater anonymity than the stock market. According to the paper, Credit Suisse could pay up to the high 10 millions, and Barclays could face a steep payment as well. And Pearson is selling its 50% stake in the publisher of The Economist magazine. The sale of £469 in cash, or some $730 billion, is to the unit's existing shareholders. This is seen now as the company's latest move to focus on education. The news follows Pearson's recent sale of FT Group to Nikkei Inc. of Japan for a £844 million total. Well, we shift now to the dramatic developments coming out of China. For in-depth analysis, we are joined on the phone by Ron Insana, financial markets expert in the New York metro area. Thank you very much for being with us today.
Thank you, Natalie.
Well, we saw yet another currency devaluation today. Is this a big surprise for the markets?
Yeah, I'm certain that no one expected it to happen a second day in a row, and it was the first time since 1994 since China has gone with back-to-back devaluations. It was interesting that towards the end of the day in China, they moved to intervene to keep the yuan from falling further by selling dollars. So that mitigated some of the losses, but it's beginning to look like China is as confused about its foreign exchange policy as it was with respect to its policies aimed at stabilizing their stock market.
Interesting point there. Interesting point. Do you think that there's a real threat of a currency war?
Yeah, I think certainly when you look at emerging market currencies, they've fallen rather precipitously in the last couple of days. And, China clearly is trying to gain, or regain, I should say, an advantage in the export market by devaluing its currency and making its goods cheaper in overseas markets. I don't know where else the currency war spreads to. I mean, certainly it'll be difficult at this juncture for the European Union, for instance, to try to radically devalue the euro, since they're already in the process of trying to do that anyway. Certainly Japan could conceivably have an interest in devaluing the yen. The U.S. maybe not so much, or not so concerned with devaluing the dollar. But yeah, I think when you look at the emerging markets, their currencies, and they export a lot of goods, they're going to be inclined to follow suit. So it could be a disruptive phenomenon. It already has been in the last 24 hours.
Well, in social media, you've recently called China an emerging market, but China is the world's second largest economy here. Do these latest events really change that?
I think I suggest that they're going to be given the status again of an emerging market and a submerging economy. I think that their economy, as this devaluation indicates, is weaker than they're willing to admit. It sounds, or seems to me anyway, like they're growing increasingly desperate. Exports and imports both fell 8% apiece last month. So their economy is probably growing far more slowly than their stated rates of growth would suggest. And they're looking to pull every policy lever they can to get things going. And they don't run like a developed economy in terms of their fused policies with respect to financial markets and foreign exchange. So I'm not sure they've market, even though they are the size of one.
Well, thank you so much for coming on the program. As always, Ron Insana, financial markets expert in New York. Moving on now to the rest of our program, we're going to shift to emerging startups in the startup nation. We are joined on set by Eyal Orgil, VP Marketing and Strategy at Voluto, a sales engagement platform which shifts the way organizations interact with their customers. Thank you so much for being with us. We very much appreciate it.
Thanks for having me.
Do tell us, what is Voluto?
Voluto's about providing a new and innovative way for salespeople to engage with their customers. So providing them the ability to get the information that the customer wants much quicker, much more effectively, much more efficiently. Provide the information to them, and you could say a personalized web page, so that the information that they have is personalized for them, exactly what they need to have, so that they can go and provide that information within the company and make their sales decision much quicker and much easier.
Well, what is the competitive landscape? How is your product, your platform, unique from others?
Basically, what we've tried to do is cover that whole process, the sales process, from the very beginning when a salesperson interacts with their customer to the point when they actually go and send them information, work into a proposal, send them the information they need to about the solution that they want to offer them, and then close that off into a contract. So really take that whole process, instead of doing point solutions that will help them in different aspects, really try to help them throughout the whole process then.
And Voluto uses analytics. How does that help with the sales process?
The analytics helps us in a later stage, where you look at today, when you're selling to a customer, you don't want to just sell them one time. That's not the value you're getting out of them. They have a lifetime value, and the analytics helps to let the salesperson know what else they can sell them, when they can come back and send them a renewal at the right time, or add new products or new services that will then grow the amount of business they're getting out of that customer.
I see. Well, so how does Voluto integrate with Salesforce and other CRMs?
We're fully integrated today with Salesforce.com. We're actually agnostic to CRMs. Many other solutions tend to be specifically on Salesforce.com, being the very popular CRM. We're agnostic. We fully integrate with them, and the sales organization can decide to work through Salesforce. They can also provide it to their channel partners to work in a standalone mode if they want, or together with their CRM. So it really expands the capability of not just your own individual sales team, but you want to help your channel partners to increase the amount of sales that you're doing, and that's what Voluto can do.
Well, thank you so much for coming on the program. Very much appreciate it.
Thank you very much.
Moving on now to the rest of our international coverage. Greece has clinched a third bailout with its international creditors, but the agreement's still not 100% finalized. Shelby Weiner has this story.
The Greek drama is coming to an end. Sakalatos, the new appointed finance minister, agreed to a deal with the Troika, negotiating peace a month after getting into office. Now Greece will vote on at least 35 priority measures, including eliminating progressive early retirement, ending certain tax loopholes, and administrative reform. Unthinkable austerity measures under the previous finance minister, Varoufakis. In exchange, Greece will receive over 86 billion euros over the next 3 years. 25 billion will become readily available, almost half of which will be spent on recapitalizing Greek banks. Banks that have been teetering on the brinks of chaos. But Brussels says the deal is not yet sealed.
What we have at the moment is a technical level agreement reached by the staff of the institutions and the Greek authorities on the ground following the weeks of negotiations. What we don't have at the moment is a political agreement, and that is what we would need.
The agreement must now be ratified by the Eurogroup and voted on by the various parliaments of the European Union. Many details remain to be discussed. Predictably, Germany is calling for the deal's terms to be tightened before the vote.
President Juncker has been in close contact with the teams on the ground. He also had a phone conversation yesterday with German Finance Minister Schäuble, Greek Prime Minister Tsipras, and he will speak today to German Chancellor Merkel and French President Hollande.
Greece is vulnerable, weakened by the GDP's 25% decline in the past 4 years, along with suffocating debt and rampant unemployment. The deal appears to be the only remedy offered by the Troika. Greece is forced to accept its fate, and once again, the country has committed itself to more austerity, the results of which remain unclear. But the Troika is optimistic, expecting a budget surplus of 3.8% in 2018, excluding the debt's interest. Only time will tell the destiny of Greece's financial ruins.
Lastly, we'll shift our attention to the Middle East. We are joined on set by our one and only Ayman Siksek for Financial Bazaar. Well, thank you for joining us as always, Ayman. So what did you bring for us today?
Well, we're going to talk about Iraq. We're going to start in this point in the Middle East. And Fitch Ratings rated Iraq for the first time ever. It never rated it before, but it's not good news. It's giving it a B- rating.
Now, B-. That sounds pretty good, though, considering what they're up against.
Well, B- is actually the lowest that Fitch can possibly give. So Iraq is not doing well at all. It's Fitch is forecasting a double-digit deficit during the next year for Iraq. Now, of course, all of that has to do with oil. The economy of Iraq is heavily dependent on oil. Oil prices keep on plummeting. So what Fitch is forecasting is a very, very poor forecast for this year for Iraq. So, and that has many, many reasons. One of the factors that Fitch took into consideration is the political instability within Iraq at the moment, which of course always impacts the economy. The Islamic State terror group that's capturing more and more territories in Iraq and also in Yemen, which we're going to talk about in a second, is also contributing a lot to this financial downturn. Now, what's happening with the Islamic State specifically is that they're also taking over all the oil compounds in Iraq, or some of the most prominent oil compounds in Iraq, and all of that money no one can account for. What they're doing with it, no one knows how much money is being accumulated by this terror group and how they're using it, most likely to buy arms. But because there is no way to put a number on how much money is coming out right now, Iraq is doing pretty bad. And this is also affecting civilian life in Iraq.
So there's no way to account for these numbers. It must be going through a black market there.
Exactly. And what we've seen recently in Iraq right now is that there's huge protests against the government. And that's because poor services, which have been poor in Iraq for many, many years, have become even worse in the last year. So recently, the heat wave in Iraq, the very severe heat wave in Iraq, was made even worse when the country couldn't supply electricity services to huge parts of the country. Residents took to the streets protesting against this. And as we know, this brought huge reforms to the Iraqi government that were just announced last week. So the situation is getting worse and worse, and Fitch is forecasting that economically, Iraq will see even worse news throughout 2015.
Right. Well, just another reason why we shouldn't be in Iraq right now. What else did you bring?
Well, in Yemen, I'm sorry, still not very good news. The Saudi-led coalition that's been recently attacking IS compounds in Yemen to try to stop them from advancing within the country has also announced a blockade of the city of Sana'a. That's the capital of Yemen. And what this blockade means is that there's a lot of relief and aid and food supplies coming in from all over the world, mostly the Middle East, to the civilians in Yemen, which are suffering from these bombs, but no one can get to them right now. There's a blockade around Sana'a, which is stopping these supplies from making their way to the civilians. And the reason that the Saudi-led coalition has decided to do this is to target the Houthis, which are advancing in Yemen, even more. So they're trying to starve these militant groups within Yemen out of the capital city, but what's happening is that the civilians are suffering too. So right now, within the capital city of Yemen, you can't get access to aid, relief, or food that are coming in from other countries in the Middle East, which are trying to donate and contribute to these civilians.
So this is also starving the economy.
This is starving the economy in Yemen. Of course, Sana'a, which is a hugely important city for Yemen financially, is seeing a huge decline in numbers. But the main effect that we're seeing right now is a huge negative effect on civilian life within the capital city of Sana'a, and this was also received with huge uproar around the world. Human rights activists are saying the Saudi-led coalition cannot do this. Civilians are suffering the most from this blockade.
All right, so this remains a predominantly humanitarian crisis, not quite economic at the moment, but what else did you bring?
Well, lastly, we'll take a look at Germany, which has been making headlines recently because of Greece and its involvement in solving the Greek debt crisis. Now, Germany has received a lot of criticism from some analysts saying that the country will actually benefit from the crisis and from prolonging the crisis in Greece, that by spreading the debt out even more and supplying Greece with another bailout deal, Germany will also benefit from the interest and from other deals around this deal signed by the Eurozone leaders. And Germany is also making its way with other countries in the Middle East. We're going to talk about Egypt right now. Now, we know Merkel, the Chancellor Merkel, recently received al-Sisi, the Egyptian president, in Germany. This was also hugely contested by human rights activists who say that he's committing human rights violations in Egypt, voting irregularities in Egypt, that he's suppressing opposition groups in Egypt. Not a very popular figure for democratic activists around the world, but she welcomed him in Germany altogether, and people were saying that she's selling him legitimacy by welcoming him to Germany. Now, the reason Germany is doing this is because it really aims to spread out its tentacles, you could say, in the Middle East and have a bigger foothold with countries such as Egypt and also Iran.
Well, thank you very much for coming on our program. It is a pleasure to have you here. I'm in Siksek. That wraps up our show today. Do stay tuned tomorrow from the Jaffa Port in Tel Aviv. I'm Natalie Ehrlich. Thank you for watching.